Hello class. This lesson will cover the topic of debits and credits. So in the first lesson we discussed that accounting is used to measure and communicate our financial position. So you learned the four financial statements: income statement, statement of stockholders' equity, balance sheet, and the statement of cash flows. But in this lesson, we're going to talk about where those numbers came from. So you're going to learn two different ways to record transactions. Initially, you would record transactions using a journal entry. So we will cover that today, and also the T account. So the word debit and credit are just a balancing tool. I use it as a way to describe if you were to make a sandwich, a peanut butter and jelly sandwich, and you would put the same amount of peanut butter on one side as you would jelly on the other side. So neither is overpowering. We have to have, number one rule, the same amount of debits as we do credits. The same amount of credits in each transaction as we do debits. So that's going to be the first rule, is that your debits will equal your credits on every transaction. I don't have 50 debits and one credit. I have the same amount of debits that I do for credits. That will be our first rule in this session, and then we will talk about applying those debits and credits. Okay, so now we are going to take the terms debit and credit and apply it to the T account. Remember, our first rule is in every transaction we need to have at least one debit and at least one credit, and so all the debits will equal the credits for each single transaction. So when you refer to debits and credits in a T account, you are saying, when I have a transaction, I want to look at my accounts, and each account would have its own T. So the T is just a little box to track all of the transactions for each specific account. So every account has its own T. Cash would be one of your primary accounts. You would list a T, and the format puts the title of the account on the top. We have a supplies T account, and we probably have listed an accounts payable. I'm going to abbreviate, but this is a liability account, accounts payable. And you possibly have your salary expense and maybe a revenue account. Every account would get its own T, so service revenue. And when I record a transaction, I'm going to put all of the debits on the left-hand side of the T, all the credits on the right-hand side. So this word debit, really when we're referring to a T account, means all of the numbers that are debited go on the left, and all of the numbers that are credits go on the right. So if I purchase some supplies on account, then what I'm going to do is I'm going to debit the supplies account. If I purchase supplies on account, let's say I purchase supplies on account, supplies would be debited, would go on the left of the T, and the accounts payable would get a credit on the right. So all of the debits go on the left of the T, and all of the credits go on the right of the T. If I said to debit the cash account for $500, and I said to credit your revenue account, you would have a $500 debit on the left of the cash account, and you would have a $500 credit on the right of the service revenue account. If we said to debit your salary expense for $300 and credit your cash for $300, you have an entry on the left of a T account and an entry on the right. So again, the debits and credits are just a balancing mechanism for us. We can look at each T and find the balance. This looks like I have $200 of cash left. When I look at that T account, I have $200 of supplies. I owe $200. I have $300 of salary expense recorded and $500 of service revenue recorded. So you see there's always one debit and one credit. It could be more than one, but they always have to balance. And that's how we refer to our debits and credits in a T account. Do I have the same amount of peanut butter as I do jelly? So just refer to in your T account the word debit as left and the word credit as right. Now we're going to take the debit and credit and use it in a journal entry and apply it to our accounting equation. So first we discussed what the word debit and credit mean, and that we always have to have at least one debit and one credit, and the total of your debits needs to balance to the total of your credits. Then we put it in the T account. Debits are on the left of a T and credits are on the right of a T. In the accounting equation, you can put a debit anywhere, but if I debit assets, my debit would increase my assets. So the word debit to the assets, cash, equipment, supplies, prepaids, means you've increased your amount of those items. You have gotten more. If you remember from your algebra class, if you move something to the other side of the equals, it will have the opposite effect. So if I debit a liability account, it would actually be decreasing that account. And if I debit equity, the overall category of equity, it would be decreasing. So then we talk about the terms credit. The word credit to an asset actually means decrease. You are taking away from your assets when you credit them. And then on the opposite side, the word credit is going to mean increase. So you can see if we were to debit an asset and credit an equity account, we would be increasing assets and increasing equity, and it would balance. If you said you wanted to debit an asset and you wanted to debit a liability, there's two things wrong. Your equation will not balance, and you're violating our rule that we have to have at least one debit and at least one credit. So you would always want to start by, when you're filling out a journal entry, first decide which accounts you're dealing with. So your book gives you this 4-step process, but I'm going to write it down in a shorthand version. So pick out at least 2 accounts when you're filling out a journal entry. Step 2, are those accounts assets, liability, or equity accounts? Step 3, are they increasing or decreasing? And then step 4 is going to be to apply your debit and credit. So step 4, apply debit and credit. And then you make sure it balances. So let's just talk through a scenario. If you were to work on a homework problem and it said you issued common stock. You issued common stock for, let's say, $10,000. Issuing common stock means you have received cash and you have given out your shareholders a portion of ownership. Now, it's not giving up ownership, but it means that you now have more external owners. So when you issue common stock, what you're thinking your 2 accounts are should be in your mind: cash and common stock. And then you needed to know from the first lesson that cash was an asset and common stock is an equity item. So knowing cash and common stock are the 2 accounts I'm dealing with in the transaction, knowing cash is an asset and common stock is an equity item. And then I decided when I talked through the problem that I am receiving cash. I have more cash, and also I have more external owners. That would make my equation balance if one side went up and the other side went up. I can now apply my debits and credits because assets, cash is an asset, increase with a debit. So this would be my debited account and this would be my credited account. We'll practice a couple more through journal entries and then this video will be completed. Okay, let's practice at least 3 journal entries. if you're doing your homework or you're reading through some transactions and it said that you borrowed $10,000, that would trigger in your mind, okay, I need to record something. I borrowed $10,000, so my two accounts I'm dealing with are cash, an asset, and borrowing is a long-term item, so notes payable. So when I go to write this down in journal entry format, I need to have kind of processed those four things. What are my two accounts? In this scenario, we said it was cash and notes payable. Cash we said was an asset, and your notes payable is a liability. Then you think through the process. Do I have more cash or do I have less cash? If I borrowed money, I have more cash. And if I borrowed money, I also have more debt. So you're looking at an asset that is increased and a liability that is increased. So you have a debit to your assets and you have a credit to your liability. When you go to write it down on your journal entry format, the first column usually has a date. And then on the first line, we list the item that got debited. The rule is not that we write down cash first. That's not a rule. And it's not that we write down the asset first. That's not a rule either. The rule is you will list on all of your transactions the account that's being debited first. You will write that on the first line, or you would put that in your homework on the drop down first, whichever account you decided to debit. On the second line, you will indent, leave a little space below, and put in the credit column the account you decided to credit. So it's kind of a horizontal format, like you were reading a sentence. Let's try another one. If you were doing your homework and it said that you purchased land for $50,000 with cash, I'm going to think about what happened. My two accounts are cash and land. Now, land is not a liability. Land is actually an asset. It's okay to have two assets in one transaction. The rule is not that we have to debit always assets. That's not a rule either. The rule is we have to have at least one debit and at least one credit. So I've picked out my two accounts, if I'm following the four-step process, that are cash and land. And I'm going to ask myself, do I know what accounts those are? What are those assets, liabilities, or equity accounts? They're both assets. I determined that I purchased this $50,000 land with cash, so I have more land. It's the account that went up, and cash went down. So the rule also says when we write a journal entry, we are going to list the debited account first, and we're going to list the credited account second, but we're going to indent. I paid out cash. If you see the phrase paid or spent cash, you should trigger in your mind, okay, my cash account is an asset, it went down, it needs to be credited. So I'm going to write cash on the second line with an indentation. I received land, I paid out cash. Now, the key here is to remember that when you purchase another asset with cash, your total assets do not change. The value of my total assets has not changed. I've changed the form of my asset. I moved from cash into the form of land, but the total value of assets that I have did not increase and it did not decrease. It stayed the same. Let's do one more. If you were recording transactions and you incurred an expense, if you needed to pay your salaries or your employees, let's say you owed your employees $3,000 for the work that they did this week. And it was the work this week happened. They did the work this week. So I'm not delaying payment to them, which I often know that students confuse the account supplies expense or salaries expense with salaries payable. But right now I'm just saying the employees did the work. So that is an expense to me. Something that's happened in the past is an expense. It's a cost I have incurred. So if my workers do work for me and I'm going to pay them right now, I need to record cash and salary expense. If they did work for me and I decided to pay them later, the recording would show salary expense because they did the work. That's the past thing that's happened, and it would show salaries payable. But in this scenario, we're saying they did the work and I'm paying them right now. So cash is an asset and cash has gone down. I'm paying them right now. So cash is actually going to be the credited account in this transaction. Therefore, salaries expense has to be the debited account. Even if you're kind of confused by that, you want to default to knowing when cash goes down, I'm going to credit that account and I'm going to debit the other account. Now, the reason we debit salary expense is because costs are negative. They need to be taking away from your equity. So we're going to write salary expense first because I always list the debited account first. And then I'm going to credit cash. Now think about your income statement. It said you want to list all your revenues and all of your expenses. Expenses by nature are a negative account, revenue minus expense. So expenses should always be recorded with a debit when they happen. The only time we would credit an expense account would be when we're closing it out. So the expense account always gets recorded as a debit because it's a negative account and it takes away from what the company is going to keep and retain and their internal equity worth. So I'm going to debit the salary expense. But what you're going to hear in the book and read in the book and see in your Learn Smart assignment is sometimes confusing because it says your salary expense increased, and that is correct. When I debit the salary expense, that specific account increased. But at the same time of increasing an expense account, you are creating more of something that is negative, so you are decreasing equity. Expenses, when they get recorded, that is going to equal an increase in the expense account, but a decrease in equity. Since they are a negative account, expenses will always decrease equity. That topic is a little bit difficult to grasp, but it's kind of like if you can think of anything that has negative. If you fail an assignment, and then you fail a quiz, and then you fail a test, and then you fail a class, that is a increase in something negative. So we did have something increasing in negative, but overall what it did was decrease your grade, right? So the word debit does not always mean increase. It does not always mean decrease. It means increase to assets. It means decrease to the overall liability category. It means decrease to the overall equity category. But when we refer to a debit for an expense account or for a dividend account, we often say it in the correct terminology is to say that when we have debited an expense account, we have increased it. But at that exact same time, since the expense and dividend accounts are negative by nature, you have decreased equity. I know that's a lot to take in. Keep practicing or writing down this in reference, and the more you practice, the easier it will get. Thank you.